Good morning, traders and investors. Sorry about the late start today. How's everyone doing this morning? Red day yesterday. Sometimes that happens, I guess. We talked about it yesterday. Didn't feel like the market was ever allowed to go down, but of course, yesterday the market closing down, S&P 500 about 1.5%. We've got some more earnings reports to go through this morning. Netflix reporting after the close today, and a brand new guest today, Tom Hulick, coming on at 8:35. An asset manager with more than $700 million assets under management. Should be a great interview. We started late enough. Let's go ahead and get the show on the road. Welcome to Benzinga's PreMarket Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All righty, traders and investors, let's go through the indices real quick. This morning, the S&P 500 trading up about 0.5%. Hopefully, we're not getting the 8 o'clock prints here. Qs trading up about 0.6%. Tech looks a little strong this morning. The Dow trading down 0.8%. The Dow's actually been outperforming. It was the one index that was hitting all-time highs, and the IWM, of course, which has been the hottest, even outperforming the Dow the past 2 weeks, down about 0.16%, 0.07%. Now I'm getting. So we'll see. Let's bring Dennis on because I don't know what prints I'm getting. Dennis, how you doing this morning?
8 o'clock prints are so annoying. The Robinhood trade dump. It's just bringing your last on all your stocks all over the place, but ignore it all. That's what happened last night. That's not what is happening here right now. Although we haven't moved much from where we were last night. We had a couple big reports this morning, which we thought would be market moving, and they're not moving as much as we thought. But, to talk about yesterday, we're going to get into that in a few seconds. We do have a special co-host with us here, too. We were missing Joel here, so we're bringing in Zunaid here to co-host with us as well here. He's here. Obviously, you know him well from Benzinga and obviously the show that starts right after this, live trading, Zunaid. But he's up early with us, so he's going to be co-hosting with us as well.
Good morning.
And then we'll obviously have a special guest coming, too. Zunaid, though, we'll ask you first. How were you trading this thing yesterday? Because this market was violently rotating again. We saw semis just getting hit really hard, tech getting hit really hard. Yet the Dow closes higher. Rotation station continues.
Yeah, for me, I traded it. I'll just put my chart up here real quick, AB. In terms of NVIDIA, I was trading it not yesterday, but the day before yesterday, where you kind of had this trend line, broke it, couldn't quite get above it, and then it kind of came down. I think even on the Qs, you had this little trend line break. Let me kind of quickly draw it if I can. Somewhere along this line here, and you can see we tried to retest it, get on top, and we couldn't. So far, I've been kind of happy with the movement. I think everyone needed to kind of calm down a little bit, let it come back. I'd love for NVIDIA to come back and maybe test the hundreds. Let's test the hundreds. Let's give it a little bit of a breather to come on back. And the folks like me who missed out on the train, let's give us a chance to come on back down and grab some shares. I think we should have some room to go. I would love 96. That's what I've got drawn out here. I would love a 96 drop. Will I get it? No clue. Will I get cursed out for wadding it? Probably.
I was saying it too on the show. I was saying NVIDIA could see $100. I don't think it's going straight there, and it's going to be a battle because if you're on the short side of this, you're fighting the overall trend. The overall trend is still higher here. Yeah. But what we said on yesterday's show is I think there's a possibility that the high for the year could be in NVIDIA. I'm going to stick with that because it's fallen about 5 points since I said that.
For sure.
Just, technically speaking, didn't make a new high on the last move. That made me nervous. I actually lightened up into that. You guys know that if you're listening to the show. And we're opening up into an area that we came up through quickly, the 100 to 120. We came up through that very quickly. We started to get into that. Now, we are bouncing this morning. We're bouncing because of Taiwan Semiconductor. So, AB, give us those earnings on TSM because that's the reason we're seeing a little bit of a chip bounce here this morning.
You're on mute, pal.
Oh, AB's.
Mute trick, the mute trick in honor.
We had to do it in honor of Joel Elconin.
In honor of Joel, who's out today. We had to do at least one mute trick. Hopefully that will be it for today. We talked about Taiwan yesterday, which of course traded lower on ASML and Trump's comments. This morning, though, or overnight, Taiwan Semi reported an EPS of $1.48, which beat the $1.40 estimate. Sales came in at $20.8 billion, beat the $20.23 billion. So, Dennis, we talked about how chip stocks are had high bars for earnings coming in. I mean, in this environment, if you're a chip company and you ain't double beating and raising guidance, it's usually not enough. But Taiwan did report those strong numbers, and the bar had been lowered slightly yesterday, so the stock trading up about 1.5% this morning.
We have a different setup than we did all year, though, where we had blue skies, AI stocks making new highs. We no longer have that. What we have and what we've created over the course of the last week is overhead supply. What does that mean? People who are chasing this trade are actually down. We have bag holders for the first time in a stock like Taiwan Semiconductor. We have some bag holders for the first time in a stock like NVIDIA, because when stocks are making new all-time highs, there's no bag holders. And, you can say, oh, well, the shorts are bag holding, but there's not a hell of a lot of people short these stocks. No. So overall, I think it's just not as simple to go straight back up as it was, 2 weeks ago when we were making new highs on all these stocks, or 3 weeks ago. So I think you get a snapback rally here today. This is usually a classic fade. So just, talking against, obviously the momentum here this morning, but I would not be surprised if this rally starts to fizzle out. Now, again, you have institutional money managers that maybe are outside this trade and licking their chops thinking, ooh, I can get in this, I need to get in this. And that's why you get these snapback rallies. So it's a matter of whether the bag holders from recently, the recent bag holders from the last couple of weeks, outweigh the institutional money managers who have been bag holding cash for way too long. So they need to be in here too. So it's going to be an interesting battle. I don't know if it's going to just be like straight down like yesterday where we rally a little bit and then we just collapse, like we did Taiwan Semiconductor, but down 18 points at one time yesterday, which was an incredible fall, probably its biggest fall of the year. The semis, I believe, if you're just looking at the SMH, had its worst day, I think they said, in like 2 years or something, down over 7% on an index. So it was an ugly day. I don't think you're going to have follow through like that. So I'm saying if it starts to leak, I think you could retest yesterday's low. That would be the one level, especially if I was shorting. I'd probably, if I was shorting this morning, maybe bringing it in. If, we do get a retest the low, we take out the lows, then it gets more interesting here. But the setup isn't as clean as it was yesterday when it felt like chips were going to roll over.
Yeah, and I mean, yesterday, not only was the chip sector its worst day since 2022, overall tech in general, the Qs closed down. Worst day since 2022 there. I mean, and if you just go through some of the big names, of course, we were talking NVIDIA, which is trading up more than 2% this morning. NVIDIA is trading up more than what Taiwan Semi is, but NVIDIA closed down more than 6.5% yesterday. You go through some of your other big tech names, Tesla closing down more than 3%, Amazon closing down about 2.5%. I mean, it was just across the board. I don't know if there were any Magnificent Seven stocks yesterday that actually closed in the green. We can talk some Netflix, which is gearing up to report tonight after the close. We'll preview those numbers in a little bit here, but Netflix trading down yesterday might have been the best performing Mag 7 stock, closed down only about $9 or 1.3% there yesterday, but Netflix
held up fairly well.
Yeah, I mean, comparatively, relatively to the other names, and the chart the chart is certainly at an interesting point here as we head into earnings. But like I said, we're going to preview that in a little bit. Going back to the chips, Dennis, you said there's a chance NVIDIA's at its, has topped out for the year. Would you consider playing this to the downside? And if so, how would you?
Well, yeah. Well, again, I'm long in the long-term portfolio, so I'm not talking those shares. But I mean, I think you're selling into strength here. I think if you've got it on for a trade, you're selling into strength. I think the easy money has been made on the long side on this. And, we were setting it up yesterday and we talked about it a lot, so we don't have to repeat yesterday's show. But, if you're just looking, we've come, beginning of the year, we started the stock around $50, and it's 200% in the first half of the year. That's a pretty darn good year. So a lot of good news baked in. The multiples expanded out to 40 times earnings on, and again, maybe they can continue to grow into that multiple, but it's a $3 trillion company almost now. So, I mean, it's not as easy to grow. The growth, and obviously competition is going to come from them as well. So I think if you're just playing tech, I think you've got to be a little bit cautious, because I saw so many people in my stream saying, oh yeah, I'm buying this dip. Oh yeah, I'm buying this dip. I'm buying this dip, this dip, this dip. Everybody has it, especially if you started trading stocks in the last 2 years, you haven't really even seen any type of bear market here, because we've been straight up for 2 years on most tech stocks. So it's like learned behavior where, a lot of newer traders are just saying, well, I buy the dip and eventually comes back, usually a week later. that might be the case, but I feel like it's going to be a tougher second half for chips. It's just been too good, too much, too many people crowded into this trade. And I feel like it's time to cool. And that's what I'm saying is it's not time to like get out of everything and sell it all. It's just time to cool and time to rotate. And Sinead, I mean, the rotation yesterday was incredible because there was a lot of stocks that, as ugly as a day as it was for the Qs, and the SPY didn't do great either, the Dow closed higher again. I mean, so you've got the tale of two markets here right now, and it is completely flipped the script. Leaders to laggards, laggards to leaders. So your first half leaders have become the instant laggards, and the first half laggards have become the instant leaders. And we know this, IWM obviously leading the charge, but it was even down yesterday. But so many stocks performing actually very well here. Zunaid, I'll throw it to you here. How do you approach this? Let's stay away from the tech trade just for a second here. How do you approach the rotation? Like, how do you get on the right side of this rotation?
For me, I mean, long-term investing and long-term, trading in terms of anything that's outside of 2 weeks is not my expertise whatsoever. We're just kind of looking at this chart. If you kind of see the rotation happening, then I'm looking at, seeing, for example, this one right here, you have a pop above 400. I don't know if that was exactly a couple of days ago, whatever the case may be, but you saw resistance there at 400. As soon as you kind of break that, I would probably get in some calls in that aspect of it as well. So, and I think you also have to keep an eye on the election cycle, not to get political at all, but just in terms of what ideas may come out of it. If any announcement comes out about a certain candidate, whatever the case may be, you might have some opportunities based on what their policies have been in the past. I want to ask you a question, either of you, about NVIDIA, though. And, who knows the future, but do you feel like NVIDIA is like the BlackBerry of the AI, or do you feel like it's the Apple of the AI?
Oh, it's the Apple.
Or is it too early?
A big reach, Sunaid.
Or is it too early?
No, because it's
because everyone loved the Razr phone. Don't get me wrong. I wanted one growing up. I wanted the the little phone that swizzled, whatever it was called. I can't think of it now, but like that, obviously the iPhone came in. Who knows what the future will look like? But you think it is the dominant from here on out?
And they're going to stay the dominant player. I mean, it's not like this is just became, obviously it's not anymore, but for a few days there became the most valuable company in the world. Like, and again, maybe the comparison is to Cisco, the internet, and obviously Cisco never got back to those highs. I mean, I'm still long NVIDIA in the long-term portfolio. So I've sold about 3/4 of my position. So I did sell a lot of it simply because I feel like it's come way too far, way too fast. But I want to be completely out of it because we know these things can continue a lot longer than you think. And I still think AI is in the early innings. There was a lot of jokes on yesterday's show. We showed salmon swimming in a river, and you were showing some stuff there too, AB. I mean, from ChatGPT where it says making mistakes like crazy. I mean, it's still early innings. I do think AI is going to change the world, but I feel like we're in like 1996, 1997 when the internet was first getting touched, and we had 3-4 years of movement higher before the tech bubble burst in 2000. It was in March of 2000. So I don't think competition is imminently coming here for NVIDIA. I do think AMD will be a player. I've said that before. It's a stock that I would look at, adding to on dips. But right now, I'm just cool to the AI trade. It was a really good first half for me with AI. It was a really good half for a lot of people with AI. I think if you've been in this trade, it's time to ring the register. And again, if you're in your long-term investment portfolio, you're just buying good companies, reasonable valuations. You picked up NVIDIA maybe back at $40 back at the beginning of the year. Maybe you're just holding it forever. Maybe you're just holding it forever. I've lightened up. I got a lot of trader in me, but I did hold a little piece.
Yeah.
So that's where I'm at. I think it's just going to be a better half for other stocks. And it goes right to Fed policy here too. I mean, if we're really going to start lowering interest rates, the stocks that benefit from that the most are the stocks that have been rallying for the last week and a half. And you can clearly see what has been going up. Obviously, there's been a lot of things going up, but, IWM benefits tremendously here.
Yeah.
So I think just, reallocating maybe some of that tech capital in other sectors might be prudent on pullbacks. Again, not chasing a 10% move in the IWM in a week, because that's a huge move.
I'm gonna real quick, AB. I'm gonna appreciate our chat here. This comment here made me giggle. It's kind of talks about how I'm a short-term trader. They know that from live trading and whatnot. But this reminds me of like maybe if I was at dinner with family and my mom kind of threw a backhanded compliment about how I'm handsome but not married yet. You know what I mean? So like the family, that's what that comment reminded me of. And I think you had someone else talking about, is this guy crazy comparing NVIDIA to BlackBerry? What's wrong with him? First of all, I was just talking about, will there be a leader coming out instead of NVIDIA? Yeah, that's all. Not BlackBerry in literal terms, but in the sense of like, is there another company that is kind of diamond in the rough. But anyway, AB, I thought that was hilarious. I appreciate the comments, by the way. I love our community.
Our chat gets feisty sometimes, you know, and we got about 10% of the chat that just likes to get under your skin a little bit there too. I don't know if those same people are on live trading chat, but there's always a few. And you know what? They keep us honest. The haters actually keep us honest. They get us thinking about our positions. I mean, if everybody just gave us love all the time, we wouldn't learn anything.
That's what makes.
So we got to appreciate the haters. So haters, here's a shout out to you, the 10% that absolutely hate my guts. We love you because you help us think better.
Eric said that's mild. It gets worse.
That's mild in this stuff. Oh yeah, it could get a lot worse.
The haters, of which there are many, as some people would say, but they have but always some
Twitter haters are worse though.
Some humorous, always some funny comments in the chat, of course. I mean, you know, going to Apple real quick. I don't know if Apple's going to necessarily be the Apple of AI, but Apple will be an AI player for sure. And of course, that's been part of the story that's perked Apple back up here. Which, I mean, this chart is certainly interesting. You look at some of the other charts, at least compared to NVIDIA or something, you don't have kind of that double top here. And Apple, I mean, you've had some analysts calling Apple to continue to break out, but I think we're going to need to wait and see what the demand is like for these new Apple products that have all the AI capabilities, because that's been, again, a lot of the bullish activity here in Apple is people getting very hyped up about the new iPhone that has different new AI capabilities in it. I just don't know. Like, I don't know if that's going to be enough for me to go out and buy a new iPhone. So I don't know if it's going to be enough for a bunch of other people to go out and buy a new iPhone, but certainly Apple looks a lot more interesting now than it did you know, when it was trading down and hitting 175, 160. So Apple, I think, again, like, don't overlook Apple when it comes to the AI trade. We're talking all about NVIDIA, SMCI, etc. Apple will be a player.
It's been just the valuation is the issue for me in Apple, and it's because it's up to 33 or 34 times earnings now that, you know, and I lightened it up at, well, I didn't lighten it up, I sold it out at 28 times earnings, so I thought the multiple had expanded enough. Obviously, multiple expansion has continued here. So they have not grown earnings. Believe it or not, Apple has not really grown earnings in 2 years. This has been a non-growth story for them. Now, do they have new products coming? Yeah, they do. You know, obviously we saw Vision Pro, but it was kind of a flop. Maybe version 2, you know, when they come out there is going to be better. But, you know, this is a cash cow, but they haven't really show those earnings. They haven't really grown earnings much. It's pretty much been all multiple expansion. What that means is, you know, the PE has went from 22 times to 33 times. So you basically have a 50% pop in a stock that didn't really grow earnings. Yes, they grew 3%. What are the numbers? I have bad vision.
I'll throw a visual up too afterwards.
So in the year ending in 2022, in this 12-month period, Apple's total revenue was around $386 billion. And then in the most previous, it was 381. So you actually, you know, it's actually down from this 12-month period ending in, that's total revenue. If you want to go net income, 100.
And I shouldn't say earnings, I should say revenue, because you know why they're growing earnings still is because of the buybacks.
Right.
This has been two stories: multiple expansions and buybacks. That is really what has driven Apple. So they've used their cash to buy back stock, bring down those shares outstanding, which brings up the EPS. But this has not been a revenue growth story. This isn't like everybody's like, oh man, the revenue is just already so large. It's hard to grow companies when you're $3 trillion. I mean, that's the biggest issue that NVIDIA is going to have going forward here too. It's like, okay, we went from 1 trillion to 3 trillion. It feels like that, and it was 6 months. But I mean, 3 trillion to 6 trillion is not going to be nearly as easy here. So once these companies get so big, they're hard to continue to grow. Microsoft, Apple, NVIDIA are monsters. Can they be $10 trillion companies? I saw an article saying that NVIDIA could be, I think somebody said, a $40 trillion company. I have no idea how they're coming up with these numbers here. But I think it's just very difficult to grow at this size. So that's why maybe reallocating to some other areas after you just had such a huge move. I mean, and again, these stocks aren't cheap. They're all trading 20 times earnings at market multiples. You're like, yeah, I get behind that. But, you know, they're trading 34, 35, 40 times earnings. They're starting to get really expensive. And that's why I think we need to go into a cooling period here. Zunaid, thoughts?
I mean, I agree with you. And here's a visual representation of what we talked about in terms of cash flow for Apple. This is on an annual basis. You can see you had a little bit less income coming in terms of total revenue year over year compared to 2022 to 2023. We'll see what 24 brings up, but you also had a little bit of net income decrease as well. And quarterly, we've seen a little bit of a decrease. Because once you're so big, once you're so gigantic, it's a little tough to grow. So you start investing in other areas. And AB, I'd be interested to see what the AI aspect of a phone looks like, because we have Siri, which I use so often to set alarms and meetings and whatever the case may be. What else can I do now on my iPhone? And how is that going to translate to the Apple Watch as well? Because the whole name of the game is use our products for a longer time. So you're on there for a much longer time as well. We'll see what ends up happening. But would love a pullback in Apple, no question. I think this is a leader where it's easier for them to just buy companies or invest with companies or to team up with companies such as OpenAI, because they have such a massive following in terms of iPhones and everything else that they have. I think it's definitely the way to play it for sure.
There you go. All right, well, let's go through some more earnings reports before we get to our special guest of the day, as well as, again, I know we were going to preview Netflix. Yesterday, after the close, we had Discover Financial, DFS, trading higher this morning. Conference call in progress, Benzinga Pro tells us. Discover reported EPS of $6.06. Crushed the estimate of $3.07 net interest income, $3.5 billion. Let's see if they did anything with guidance. Doesn't really look like it, but that EPS beat enough for Discover to be trading higher this morning by about 2.5%. Taking a look at the chart, sitting up here near all-time highs. We've talked about what stocks tend to do at all-time highs. They tend to go higher until they don't, which is what we've been seeing in NVIDIA the past few days. But Discover here getting a perk up. I mean, we can look at some other credit card stocks as well. How's MasterCard doing?
Well, again, Discover moves more with Capital One, and obviously it's going to move directly with Capital One because Capital One is buying this company. I short DFS because it started popping $7-8 on this report. It's getting bought out, folks. I don't care how good the earnings are. It's going to trade with Capital One to a certain extent. So I bought COF against a short in DFS. I still have that on, hoping to get out of it, at a decent price, obviously after 9:30 when the liquidity really comes in. But I mean, when you got DFS rallying $5, $6, $7, $8, do the algos forget that it's getting bought out? So, I mean, it's not like, oh yeah, it's going to go 160, 170, 180. It's already getting bought out. So I have no idea what the algos were doing last night, buying this up to almost $150, and they weren't buying Capital One up enough. So I've got COF long, DFS short. I think it comes in.
All right, just for the sake of time, we'll just rip through some of these other earnings. United Airlines also came in yesterday afternoon. Bar was set lower by Spirit Airlines. Subdued revenue guidance, but you had United Airlines report $4.14 EPS that beat the estimates by 21 cents. You had revenue come in at $14.99 billion, beat by 20 million. And then they also raised guidance. Did they raise guidance?
I think they lowered guidance.
Sorry. It says United Airlines continues to expect. So they basically reaffirmed guidance. And they gave a range of $9 to $11, and the estimate was $10.04. So basically, a wide range there on the guidance, the EPS guidance, at least for the rest of 2024. But it was slightly, it was I would say in line. I don't know if they actually lowered it, but certainly didn't raise it. And then you're seeing the stock trading up very slightly this morning, 55 cents, about 1.2%.
Airlines have now priced in a lot of bad news. And we are seeing and everything else rally here. So I think that helps to lift airlines here too. And Save warned. I think it was Save that warned last night. One of them warned. It was Save that warned maybe last night. Spirit Air. So that came out. Was it last night or am I getting my days mixed up?
You're getting your days mixed up. It was 2 days ago.
Day before.
Yep.
Day before Save. Okay, Save. Actually, no, that was, day before the Save warned. So you can see airlines, not doing great here right now. They're, obviously Spirit Air is a different story, and it looks like it might be ceasing to exist at a certain point in time if it continues to go down like this. I mean, UAL, DAL seem to come better to be a little bit more best of breed, but they've been beat up here too. Is there life here? Zunaid, I can throw it to you. Is there life in the airlines here? Are you buying the dip on these airlines? Is this where money's going to go? Or are airlines just too boring, and not sexy enough for everybody to
They're just
pile
not sexy enough. I was watching earnings of,
Yeah.
just earnings in terms of general, but then I was looking at Delta, and I remember watching the charts, and it says $45. I was like, wait a minute. I remember this being in the $45 area in 2022. So like, yeah, there's just not enough for me to play here in terms of a long-term investment or anything like that whatsoever. No, thank you. I mean, just like here, let me go ahead and kind of quickly just, yeah, there you go. The chart's right up there. Or you have
Yeah.
save up. Let me put up Delta here for a second. Like, look at this. Like, we are still in the same vicinity. There's nothing that we're really doing here on Delta.
Yeah.
So it's not that like the comment that said earlier, long-term investing, not my shtick, but definitely not in a company like Delta where it's not really going anywhere.
Yeah, I mean, this is the issue that you've had investing in airlines, not just in the last 5 to 10 years, but it feels like forever.
Yeah.
And again, they've just been tough investments because obviously the expenses get huge. They're very cyclical, so they do good for a while and then they come off here too. I mean, even looking at the long-term price in Delta here, I mean, 2015, we're 2013. I'll just keep going back even further on the chart. 11 years. You got a little dividend there, 1%, but in 11 years. So one 45. Of the best bull markets that we have ever seen, 2013 to 2024, Delta, which is supposedly best of breed of these airlines, is basically flat. And then you go into LUV, same story. Well, LUV is even a more horror story. $23 LUV in the year 2001. That's 23 years ago. It's $28. What a terrible place to be in long term. And I've learned the hard way. I have a little bit of American Airlines. So it's down from 55 to 15. Maybe it's their time. No, it's not their time. It's never their time. No. Airlines just terrible investments. Maybe they have their day in the sun here for a little bit because we're buying all the laggards, and there's no laggards. Nothing lags more in these airlines. Yeah. But I think it's just, a glimpse here, and eventually they start to probably just resume down or just resume sideways movement. And sideways is bad too. When everybody else is making money and your stock's going sideways, you're losing relative to everyone else.
Yeah,
so you
there's
say, well,
opportunity
I didn't lose any money, but it's still not great.
Yeah. There's opportunity cost. Just like whenever you bag hold a stock, you're hoping for it to come back, but you're also missing out on using that capital on other profitable investments, AB.
100%. All right, some other earnings.
We had jobless claims just now, I think. So I just got picked off a little bit there. It wasn't too crazy, but I forgot. Always forget the numbers. Initial jobless claims. I've got it, AB, if you don't have it. You have it?
I got it. Yep. Came in at 243,000 versus 229,000 estimates. So that came in more jobless claims than expected. Continuing jobless claims came in at let's see, 1,867,000 versus. So that was also higher against 1,860,000. So perking up there, labor market cooling down. That's going again in accordance with what some of the Fed officials are saying, that they're starting to get more worried about the potential risks of keeping the interest rates too high for longer and cooling down the economy too fast, rather than the risks of inflation coming back. So you have heard that shift, or that tone kind of shift from Jerome Powell et al. And again, they do have a meeting this month. Expectations for them to not do anything with the interest rates in July, but again, for that first cut to come in September.
Looks like pretty much a nothing burger here. I saw jobless claims on the calendar this morning. I wrote down even on my sheet, it says jobless claims right here. And I totally forgot about it. But you know what? We really didn't move anything.
Yeah,
like 2 S&P points. Jobless claims isn't a big mover.
No, the labor data we get on Fridays, the one with the non-farm payrolls and whatnot, that one typically tends to move the market. The jobless claims, or a lot of times the ADP numbers, even though they will also give us some insights into the labor market and the health of the economy, tend to not move the market as much. All right, 8:31 a.m. Before we bring on our very special guest of the day, let's run through just a couple more earnings reports. We did have Blackstone report this morning. Blackstone reported EPS of 96 cents, missed by 2 cents, revenue of 2.8 billion. Beat by 240 million. They declared an 82-cent dividend. Total AUM growth over year. Inflows jump, but either way, the stock is trading down now 2% today after closing down 1.5% yesterday. We'll go to the daily chart here on Blackstone.
It's been a good long-term stock. I do think on pullbacks, people buy this thing. I don't think it's going to really get hit hard. It was hard. It was reporting on a bad morning because what we have here is the rotation going the other way this morning, where we have actually the IWM trading down. We have, a lot of, value stocks trading down. We have tech stocks rallying this morning. And then Blackstone, it would have been better for it to report yesterday. Sometimes the morning just matters. This is not a value morning. This is a tech morning. Tech is bouncing, value is getting hit. So then you get a value stock reporting. It's like, well, we're not into value this morning. So sometimes just the day matters more than the actual numbers. I don't think the numbers were that bad. Yeah, it was a slight miss, and yes, the stock's trading down. I do think you have underneath supply or underneath demand on this one as opposed to overhead supply. I think the 125 to 130 area finds buyers all over the place. I do think 130-ish, you probably find buyers. So I'd actually be inclined to buy the dip. I'm probably not coming in early, but if it stabilizes, starts to show some life, I wouldn't be surprised if they buy the dip around 130.
All right, a couple of other companies that reported. I'll throw it out there to you, Dennis and Zunaid. Do we want to go? Do we want to eat some pizza this early in the morning?
Yeah.
All right,
we like early morning pizza.
You're not even gonna let me get to the next option. Let's go to Domino's Pizza.
I'm all over it.
A little bit of a disaster here. Someone dropped the pizza out of the box, completely face down, unsalvageable. EPS $4.03, beat by 35 cents. Revenue of 1.09 billion, missed by 10 million. Those numbers don't sound too bad, but the guidance here I don't think was great. And then you had they did declare a $1.51 dividend. What was so wrong with this report, Dennis, that it's driving it down more than 10% here this morning?
What's wrong is restaurants have fallen completely out of favor. And let's take it away from DP Zebra for just 1 second. What the hell has happened to Chipotle? It goes down every single day. I mean, we talked about the pre-split run and the post-split hangover. It has been unbelievable post-split hangover. I just come in. It's like, it doesn't matter. Tech goes down, Chipotle goes down. Tech goes up, Chipotle goes down. It's like for the last month, this stock just goes down every day. Here we are again, and Chipotle's down another $1.50. I'm not even sure if there's news. I think it's just down on DPZ. I think it's actually down on Domino's Pizza here this morning, unless you can see another headline I didn't see. But, we've talked about this splits. Pre-split, they run up into it. Post-split, they get the hangover. You know who else is getting a hangover? I know we're going on a tangent as AVGO. Again, Broadcom selling off with the chips yesterday, but still, it wasn't rallying for a few days after the split here, and now it's starting to obviously sell off here. So you're seeing the same type of issue happen there too. So for whatever reason now, it seems like restaurants have fallen out of favor. DP Zebra has been one that's been in favor for a very long time. Down 12% is a huge down move for this stock. I don't know, 400 maybe, but I'm not even sure I want to buy the dip on this because right now restaurants are out of favor. I'll throw this one to Zunaid. You buying DPZ? You buying some pizza?
No, I'm not buying pizza on that end at all. I'd be interested in buying some Chipotle. CMG at around maybe say 50 or so.
Well, let's talk the technicals on that one then, because that is more interesting. And people do trade Chipotle a lot more than they trade Domino's Pizza, and it has been ugly. I mean, I keep thinking there's going to be a bounce here. I have not been trading it really too much, but I'm watching. I day trade it, but I haven't, put it in a long-term portfolio or anything like that. But Kramer's trying to make up excuses and saying, oh, there's a rumor going around that it's portion sizes and, that they think the portion sizes are smaller and now that people are boycotting it for that. I think that's all just, Kramer trying to justify a down move in a stock that was very overbought, very excited people before the split. And, you're getting that post-split hangover, and it's just lasted a lot longer than they normally do. What turns this story around?
I'll go. Here's my thing. In terms of where the technicals are, look, you had a lot of support or you had a lot of resistance around the $60. Then it finally popped and you kind of had it as held as support. Then that finally broke and then you had a down drop here at 60. So that's kind of like the resistance area if you wanted to get over. In terms of where would I be interested in it? 50, 52 is where I'd start buying it, maybe accumulate a little bit. And then 50 is where I'd try to be like, all right, cool. This is my area to go ahead and get some in. I will say this. That's my technical. Here's my nonsense comment of the day. I go to Chipotle about 4 times a week. And I hate that I have to do this, but I do it anyway. No, I don't pull out my phone. I'm not that guy. But I'll ask for, al pastor chicken. They'll scoop it up. Then I'll ask for a double. Then they'll make it nice and pretty. But if I ask for a double before they even put the first scoop, I get put less meat. I've done the survey on this 7 times. I promise it's true. That's my one tip of the day on
Ah,
Chipotle.
There you
yeah.
go.
So we have we're not only a trader of the stock, but a consumer of the product here
Oh,
as well.
absolutely.
And he can give you the tips on how to go about eating at Chipotle.
Yeah, don't
here.
pull out your phone. That's just rude to the individual that's not making a lot of money hourly. Don't do that. Please don't do that. That's just rude. But anyways,
all
that's what I
right.
got.
So you like it at 50?
Yeah, 50. So 52
round
is where I
number.
would say, hey, here's 20% of my position. 51, here's another 50% of it. And then the remaining 30% I'm grabbing at $50. That's my way to kind of accumulate it. And then I think if you're swing trading it, if you drop 48, I'm out. That way you're risking $2 for a chance to come back and maybe test the levels here of about, say, maybe 54 or so. At least a 1-to-1 trade at the minimum. But that's the way I would trade it. Whoever said I don't trade long-term, there you go. That's a little long-term trade.
Do you have a long-term portfolio, Zane? Do you have a long-term portfolio too? It's all pretty much trading.
I'm too arrogant, and I believe I make more money just myself than I would in just keeping it in the markets. Thankfully, I've been able to beat it. I think I've had 2 losing years. With COVID, I definitely lost money. But I think I was down maybe about 4% compared to the market. But no, I'm too arrogant. I'm too arrogant.
Yeah.
All right, 8:38, time to bring on our special guest of the day. A first-timer coming on Benzinga Pro. We've got Tom Hulick, an asset manager with more than $700 million under his belt. Without further ado, let's give Tom our very special pre-market prep welcome and see what he's been watching when we get back. All right, Mr. Hulick, welcome to Benzinga's pre-market prep. How are you doing this morning?
Great, Adam. Can you hear me okay?
I can. Yeah, I can hear you okay. Let's
How do you like the light? So I'm in Salt Lake City, I'm in Park City. I've got a wedding to go to this afternoon. One of my best friends is tying the knot.
Nice.
nice.
Congratulations.
Congrats.
You're going to be doing
Yeah. So I've got the ski lift. I've got the ski lift behind me.
There you go. So you got up early for us this morning.
We're up early in LA too. So,
Okay,
but I'm up.
go.
Yeah, I'm good.
So strategy asset managers, before we get into it, what is that? Tell us about what you guys do.
So we're an SEC registered money manager. We work with institutional investors and also private clients. On the institutional side, we've been a money manager for 25 years. Morgan Stanley, Merrill Lynch, an SMA manager. 4 SMAs, quantitative portfolio, which is interesting. It's all market oriented, momentum, growth, value, and also a global portfolio. And then on the private wealth side, we do family office, individual private wealth management. That help?
Yep, that does help. So let's get
you can beat me up in any way you want.
All right, there you go. Let's get into some of your market outlooks here. I know energy and electricity has been a sector you're watching. Talk about the trends that you're seeing here in energy.
So some of the interesting things that we're seeing is that the demand for power is not abating, and it's going to continue to go on for quite some time. And we've looked at companies that perform in alternative energies, and we've also looked at the companies like Emerson Electric and Eaton Corp and Constellation Energy that contribute to the assistance in the upgrade in the infrastructure system and electricity. So that's kind of what we're doing right now. We're looking at power supply companies as well as companies that can assist in the growth in this area.
And then so like specifically, I know you mentioned a couple names there, but are there any other names in the energy space that you're watching at the clean energy space? I mean, now with the Fed getting ready to cut interest rates, are there some beaten down clean tech names that are starting to look a little interesting, solar names potentially?
So, it's in the clean tech area. We don't specifically have a solar name.
Okay.
But if you wanted to go into clean energy, you could focus on Constellation Energy Group, which operates nuclear reactors. And that has been an outstanding performer. As the market participates, governments have started to realize this, climate initiative. But most importantly, this is an AI case because as energy demand grows, we've got to find other sources alongside of just regular electricity. Nuclear energy is going to be one of the most important things. We've got the reactors to bring online. So Constellation Energy Group is one of those big areas.
Yeah, and we saw that during COVID. A lot of and in addition to COVID, when the Russia-Ukraine conflict started,
Right.
and gas and oil prices went crazy in Europe, the countries that had more infrastructure, France to nuclear energy, were able to fare that better. And I think since then, other countries, including here in the United States, have been like, hey, maybe nuclear energy isn't such a bad word after all. Maybe we should start bringing back some of these, reactors, or potentially even building new ones. Has that momentum continued, Tom?
I think so, Adam. If you go back to the Russian-Ukraine crisis and then the energy crisis that could have gotten really bad over in Europe, you're talking about who has the control of the energy in the pipelines, or how do you resource energy that is offline to switch over to something else? If you want to transition from nuclear over to natural gas,
Yeah.
that's another area that I think is really undervalued at this point, and an opportunity for somebody to get into. We're looking into that area, in the nat gas area. We see tremendous potential in the U.S. as well as in Europe and everywhere else. So that we like nat gas, and we like the nuclear, like you said.
We saw so much, real quick, Adam. We saw so much of data centers and power being used in the Bitcoin craze, right? I mean that really
Right.
kind of helped things out so much in that aspect. And I see a note here where it says data centers demand for electricity could rise from 1 to 2% of supply today to 8
That's right.
by 2030. So if that trend holds, so you're saying, hey, we're like, the market isn't really calculating just how big of a resource this could end up being, is what I'm hearing, right? It's like, hey, yeah,
Yeah.
people are thinking about the idea, but they're not thinking about how extreme and how much power and energy we're going to end up needing.
Yeah. So as an active manager, any money manager is going to try to get out in front of any trend that you're seeing. And we've been telling our clients that, we're going to participate in technology, but we're going to participate downstream in some of the other trends that are happening. And energy is one of them. So when you look at the infrastructure failures that we've had in the U.S., or the outdated infrastructure, utilities, for example, and data centers are continuing to grow. And this AI revolution that you see in my notes, it's interesting to see. The data that we see from chat GPT queries, or let's just say the 300 data centers that are occupying the state of Virginia, one of the largest data center locations in the US. How are we going to power those data centers? And so you have to have this, the idea of looking at alternative sources of energy, looking at Constellation Energy Group, because the demand is growing so much right now, and we're out in front of it, looking at some of these infrastructure plays. And I mentioned to you Constellation, but the other name that we're looking at is Emerson Electric.
Yeah.
And that's a no-brainer for a company that's been around for over 100 years, design, supplying technology, engineering services to the data centers. It's important to focus on this area, because a lot of people are concentrating in the tech names, and that's great. But tech also goes downstream into these other great companies that are using it to their advantage.
Dennis, this is one of those where people make fun of me for not having long-term investment stocks. This is like the thing behind the thing that we talk about. And this would be a play where it's like, you know what? Assuming the market doesn't have everything crazy, assuming we want to see a black swan event, yeah, I'm interested in this play, because who wins, the AI game, who continues to lead it, who knows? But like, you're going to need power, you're going to need energy to continue that growth.
It's true.
So Tom, I mean, going back to your strategy as just an active asset manager, I mean, I'm sure, you can't really throw all a client's money in some of these, names. How do you deal with like today's current market environment? You have the indices trading near at all-time highs. Is it as simple as just keeping them in like broad-based diversified portfolios? Are you actively, stock picking and finding these? Like, how much of your portfolios are in, just like the big tech names, et cetera?
So we're very bullish over the next couple of years.
Okay.
We focus on specific sectors because of the advancements that we see in supercomputing and AI. And, in addition to the technology sector, we like healthcare. We like industrials. And if you want to look specifically into the healthcare sector, and I'm glad the kind of the segue is happening. I see an opportunity in a really undervalued sector, and that's biotech. And if you think about the biotech sector and how it's lagged over the last decade, for example, the M&A activity that you're going to see going forward over the next, I would say, 12 months, 24, 36 is going to be incredible because of all the advancements that the AI and technology has delivered in this sector. So we look at healthcare. We focus our clients into these 4 sectors that we were just talking about because we see outperformance in these areas: tech, healthcare, energy, infrastructure.
Let's talk. I want a quick question for me. Let's talk downside, because obviously everything is, AI positive.
Sure.
But I'm sure you guys also take a look at like, okay, what can go wrong that might not happen, but it can happen. So is there any risk that you're seeing in this play in terms of energy with AI kind of parlay together? Any downside, any events, any theories on what could go wrong maybe?
When we look at the downside risks, we look big picture. We talk geopolitical.
Absolutely.
We talk about specifically if you wanted to go into what happened last week with the assassination attempt on President Trump. If that went a different way, all bets are off the table. I mean, we could have a real problem on our hands. So God bless us that nothing happened. But outside of the geopolitical and the things that we can't control, if the Fed doesn't start lowering rates in September or subsequently afterward, we're going to have some issues. If the consumer starts spending less, as they are now, we'll have some issues. But I think that the engine in the United States is working very well. I'm more optimistic than I am pessimistic. I do think that we can. I think that if you look at the politics on side of things, it's not the politics, it's the policies, and both sides are looking at pro-growth policies. The U.S. needs to continue to lead in these areas. So when we look at the risks, I'm more kind of a glass half full type person. I was taught to look out beyond rather than the tactical stuff. Yes, we do that, but big picture, I think things are going pretty well, and we really could experience a market that eclipses all the other markets that we've seen in the past. And this is a trader's market, which is interesting. It's an active managers market. It's definitely not an index strategy market. I'll tell you that.
Yeah, you can see that from the chart. There just continues to go and go, AB.
Yeah, that's what the market tends to do over the long run. Dennis, you got anything?
No, I just wanted to just ask you. I was going to actually piggyback off your biotech. So would you be looking, if you think there's a lot of M&A coming, would you be looking like XBI to try to take advantage of that M&A?
Yeah.
Because obviously IBB is made up of some bigger ones. You going after the smaller stuff?
Well, so we don't own any of the smaller stuff. So we're a large cap manager, but we do, personally, I would take a look at that. I think that's a very, very smart play to consider. If you look at all the big pharma companies and some of the big biotech companies that they're out there, they've got a portfolio, and that portfolio is aging, and they're going to need to backfill some of those names. And let's look at Merck. For example, or Pfizer. Any of those companies are going to have drugs that are going to come offline in a few years, and they're going to need to find ideas out there. And then if you look in the biotech area specifically, there's some incredible things that are going on, and AI is delivering. So we're focusing on the Mercks, we're focusing on the Lillys. We think the GLP drugs are transformational. Look at the cancer vaccine space. You've got other areas that aren't even being mentioned that are going to increase the longevity of our lives, And I just think that it is probably the most undervalued sector that is out there. I was talking to a friend of mine who runs a biotech company recently, and he said, "Gee, Tom, this is an opportunity now. We've just been so undervalued, but we that's a good thing because the assets are discounted at this point, and so they're going out, and the activity is starting to pick up quite a bit."
All right. Well, this has been a great conversation, Tom. Love to learn more about your strategy, which sectors you're looking at, how you're investing in them. And we're going to go ahead and let you go. Enjoy the wedding. Enjoy the weather out there in Park City. And we'll have to get you on again soon.
Yeah, that'd be nice. Thanks for having me, you guys. I hope you have a wonderful weekend.
Of
Thank
course,
you.
Tom. Hope you enjoyed coming on Pre-Market Prep for the first
We
time.
did.
Hopefully it won't be the
I
last.
did.
And we'll chat
Thanks, Tom.
soon.
Take care.
Alrighty, guys. We've got about 10 minutes left. I've been teasing a Netflix preview basically
sure.
all show. Let's go ahead
Let's do
and
it.
talk some Netflix, which has been, again, one of the tech stocks that held up better than most yesterday. And here you had some analysts getting bullish ahead of the report. You have the different parts of the business going. They've obviously allocated some of their money toward this ad part of the revenue, which was a really smart move by Netflix, and I can talk about why I think that is. But Dennis, I mean, just let's talk about the setup. Are you playing this the way you like to play other names in terms of holding into the report?
Yeah, and I've been taking it overnight and then flipping it out, and it has been worked again here tonight, obviously, or last night. But one thing to consider is we've got a little bit of a tech record. It's held up really well. I mean, considering how bad tech got hit, it's held up well. So relatively speaking, Netflix is outperforming other tech stocks here right now. The bar is high here going into the report. So obviously we're going to get that report here tonight. Obviously, I'm not taking it in through the earnings report. I'm all completely out of it right now. I sold it. I've already sold out. I think the bar is high here. So I think they've got to come out, and you're going to have to see, obviously, users going up. You're going to have to see, them beat the number handily, because if they don't, this is the kind of stock that can move 40, 50 bucks on the report. So I'm actually nervous about the longs going into this report. I don't think it sets up well.
I will go ahead and say this, which might be a hot take. We've had a couple big reports from NVIDIA. I will venture to say that this is, if not in the top 3, in the top 5 most important earnings reports of the last year or so. I'm not talking about just year to date, in the last 12 months, because this is the first really big tech, mega cap tech stock to report this earnings cycle. And we're kind of at this precipice point where I think a lot of people are nervous about the valuations in big tech, nervous about, the growth rate. Okay, is the Fed cutting rates because inflation is down below 3% and close to 2%? No, the Fed's cutting rates because we've seen signs that the economy is slowing. And if Netflix reports a bad earnings, which we know it has a history of not just reporting bad earnings, but reporting earnings that really move the stock either way. You go back to some of these reports. You look at this one back from April 2022. I still remember exactly where I was when this report came out, down 35% after this report. And so if Netflix has some type of report like that, where it closes or it moves down 15% or so, I think you could see a lot of investors that have just been looking for essentially any excuse or any reason to sell mega cap tech names.
I think so too.
And we've seen that. So I think this is going to be a very, very important report, not just for Netflix, but for the entire market and industry.
Yeah. And Andrew, here's the thing. You had Netflix that was raising prices, right? And then you also had Netflix that was saying, hey, now we're going to stop you from sharing your account with your mom and grandma in a completely different state. And that helped create the accounts, right? That helped increase revenue and get more people in the ecosystem as well. But is that story kind of now done? Right? Have those numbers that were going to come in from people creating multiple accounts, has that kind of been done? And I love how you're just naming all the A names, is which you just went from Andrew to Alan now.
I'm laughing about it's just nonstop, and I can't stop laughing. The chat is on fire, and I'm reading the chat, and I'm just laughing the whole time. Alan, he's changing.
But I was very close to saying something the first time, but I was like, I'll just let it slide. It's early for him. It was.
Yeah. We don't care. I mean, we see that happen every once in a while. It's all good.
It was just funny. But I do mean it though. Has Netflix already kind of
here's
gotten the boost from the new accounts that were going to come in because of their policies that were changing?
Well, here's why I think the ad thing was so smart is because it brings in two different streams of revenue. It brings in the revenue clearly from the ads itself and by all these subscription fees from people that may have been priced out before or who would have never gotten a Netflix subscription until they dropped it below $10 or whatever it was for that thing. So you get both those new streams of revenue coming in. And a lot of that, again, has been priced in. A lot of that has been part of this move from, $200 to back up to $650, basically all-time highs for Netflix. The one thing that a lot of analysts are talking about is, Netflix's investments into live sports. And I think they were working on getting some deals next year for different live sporting. I mean, we've seen them, do some different live events. Of course, the roast of Tom Brady. And you had, what else did they do? They did they have that hot dog match coming up with Joey Chestnut versus Kobayashi in September. They have the fight.
The Mike Tyson one.
The fight
was the Mike Tyson, whatever.
Got pushed back and then.
But I don't think any of that is going to be reflected in revenue. It could be growth drivers for the company yet. That's further down the road. We might get some more information about these things from the executives at Netflix, but I don't think it's going to be reflected in there. So I'd be a little bit cautious heading into this report. With that said, I mean, Netflix, again, has been on a tear recently. So if they report good numbers, that's kind of what I'm hoping for, because it'd be great to see Netflix break out and make new all-time highs and see the Qs continue to rebound from yesterday, which again was the worst day for big tech since 2022. But I'm not that, I don't know. I really don't know. I'm not that bullish on it.
Yeah, you've got, just taking a look at this here again from the visual side, you've got analysts that have 11 strong buys, 14 hold. So they're not quite sure in terms of majority of them. I would say 52% from the analysts that we've got covered here. They're like, just hold it. We're not really sure if we want to buy more, if we want you to sell or not. You obviously saw a big revenue dip in terms of, the net income when it came from Q3 of last year to Q4. And you obviously saw it come right back up as well. So I think the live event space of this could be really interesting. I think that's another revenue generator. Thankfully, Tom Brady's thing was such a hit. Everyone was talking about it, tuning in. You saw so many people watch it back afterwards as well. I think that can be something that'll continue their growth. Will it be big enough to kind of offset anything else? Who knows? But you mentioned ads. I don't want you to ever mention ads again.
Well, thank you for turning the ads off today. I think the chat appreciates that.
Yeah, from here on out, you will not see mid-roll ads. We appreciate your patience.
We won.
Appreciate the patience.
Chat,
we value your opinion.
Complaining works. Complaining works. Never let anyone tell you that complaining doesn't work, because clearly it does. Thank you, Zunaid, for doing that. Speaking of the roast, just a quick thing. We did interview Drew Bledsoe on the Raz Report 2 days ago, and I got to speak to Drew for a second.
That's awesome.
Very nice guy. I was like, holy cow! Like, what did I do in my life to end up in a position where I could even speak to a former number one overall NFL draft pick? Was pretty cool. And again, he was a really nice guy. Here's the mark of a nice guy before we'll go 1 or 2 minutes long today, just because we started 2 minutes late. Here's the mark of how some of these guys are nice, is that when we reached out to Drew Bledsoe for this interview, no assistant emailed us back, no, automated reply, no, oh yeah, get on my Calendly. He just wrote a very nice email back and said, yeah, sure, I'd love to. And I was like, man, that's cool that this guy is worth however many tens of millions of dollars, could be doing whatever he wants to do. And he's taking his time to be writing us back. I always appreciate that. Let's see. Any major headlines we missed this morning? I see one about Ford to spend $3 billion expanding large truck production. I don't know if that's moving forward real quick. Let's check there. No. And the EV, has there been a story that died and fizzled out more than EVs?
I know. Tesla's the only one. Because it's moving into other stuff. I mean, we did miss the Beyond Meat. If you want to talk Beyond Meat, there's rumors about restructuring. Stock was actually, you should have saw this last night. Bring up last night's chart. This thing traded down to $4 last night. Absolutely. The algos saw that restructuring, like, oh my gosh, it's bankrupt. The algo said, sell. And I was like, $4? And then it was back up at 6.
Looking at
it was down there. It was actually lower than 4, eh? How low did that get?
It was like 3 something, I think.
Let's see. We got to a low of 375. Looking at this chart, I thought you were going to say an executive bit someone again, but I don't think that was the case.
I don't remember. I know that story.
Oh, you don't remember that story?
I don't remember.
Oh, really?
Oh my god! All right, well now hold on. Let me find it real quick.
Yeah. Well, while you find that,
fighters.
Yeah, it wasn't fun. But while you find that, here's Beyond Meat's chart. This is a monthly, because I just want to show where it was to where it has gone. 97% to the downside. Everyone was talking about the Impossible Burger, this, that, the other. Here we are, 95+% to the
Story, put
downside.
meat in your burgers.
There you go.
Beyond Meat
Suspends
suspends
an
an
executive
executive
of biting a man's nose.
in a fight. I guess the meat. I
Wow.
guess
He
the.
looks
I guess
pretty tough, actually. I don't think I'd like to fight that guy.
no. Looks like he got a little knock up here though. But I mean, maybe the fake meat wasn't cutting it, and he was craving some real, flesh and blood. It just happened to be on a human nose, and that's probably not what you want to do.
That's fake meat. I gotta get some real meat in me. Arr, Mike Tyson style.
All right, guys, that'll be a wrap for today's pre-market prep. Again, apologies for the late start. That was my fault this morning. Won't happen. Well, I mean, I can't.
It probably will.
Oh, yeah, but
My
it's all
favorite
good.
was there's a comment from like someone in the chat that said AB's probably sleeping. You weren't. You were
He
stuck
was
in
there.
traffic.
He was there.
This is
He was
one. This
gone.
is the one where it was like AB over here sleeping. That was my favorite one to start things off.
Yeah,
He was in. He was 2 minutes late. Give him a break. 2 minutes late.
Yeah,
We're all
2
2 minutes late.
It's 2 minutes late. It happens. But tomorrow we will be talking to CC Legator some options.
Oh,
Well, I
nice.
shouldn't say we. I should say y'all because I will be out tomorrow.
Yeah.
It's actually I'm flying into Milwaukee tonight. So I might do some interviews at the RNC. That should be fun. And then Zunaid, I think you'll be joining tomorrow as well.
Yep.
So it'll be
Yeah, we got
Dennis,
back-to-back
Zunaid.
Zunaid here.
Yep.
Let's go, Z-Man. 2
fun.
days.
He gets so, but
It'll
then
be
he's
fun.
got to go another hour here with live trading. So
Well,
it's
thankfully
fun talking.
Ryan handles that now, so like I get a little bit of a break. But I'm
Oh,
good.
you're
I'm
not?
excited
You
for
haven't done it?
tomorrow.
Okay, good.
Yeah. I'm excited. You and I will kind of chop it up, see how tomorrow's show is going to be. But AB, have
Sure.
fun tonight. Not too much fun. Don't end
I
up on the
appreciate
news,
it.
or I will cover it in the morning. Appreciate you. having me on.
Let's Zunaid, we got to come up with some good Z names for you for the show tomorrow in case you want to,
I want to call him Zed. I still got the Zed.
I can put Zed. I know what tomorrow is. Zed.
Zed.
Got it. Done. Say less.
Yeah.
I'm good
Zed.
with that.
Are there good steaks in Wisconsin? I know there's good dairy. Maybe I'll have like a milkshake or something when I land in the airport. I don't know. A nice steak and a milkshake, the most classic
Getting off the
American meal.
rails.
There you go.
All right, guys. Thank you for tuning in. Of course, live trading will start right after this. Please smash the like if you have not already.